Welcome back. In the world of global oil, prices edged lower today after posting the biggest gains in 6 weeks a day earlier, buoyed by moves by Saudi Arabia's crown prince to tighten his grip on power and rising tensions between the kingdom and Iran. U.S. West Texas Intermediate crude slipped 10 cents to $57.25 a barrel. The contract surged 3% on Monday, the biggest percentage gain since late September. Brent crude futures were down 19 cents at $64.08. On Monday, they closed 3.75% higher, also their biggest percentage gain in about 6 weeks. Both benchmarks hit their highest since mid-2015 during the session. Okay, let's talk more about the oil market with Pamela Bassi-Duke, one of the research analysts with Financial Derivatives Company here in Lagos. Good afternoon, Pamela. Thank you very much for joining us.
Thank you for having me.
Now, we've seen oil price trade at above $64. That's the highest level since June 2015. What's responsible for this surge? Does it have to do with the supposed system cleanup in Saudi Arabia?
Yeah, definitely. I mean, Saudi Arabia is the largest exporter of crude oil, and any news that would show that there's going to be an effect on Saudi Arabia's production would have a very great impact on the market. So we're seeing the market reacting to the news of geopolitical tension in Saudi Arabia. The expectations that there will probably be a disruption in oil production. So that's what has boosted oil prices lately. But let's not forget that before then, previously, we've seen oil prices rise due to a high compliance among OPEC members. We've seen compliance rise to above 120% so far.
Now, OPEC members are actually meeting at the end of this month. What we're seeing in the global oil market and the prices, is there going to have any implications for this meeting later this month?
Well, with the OPEC meeting happening in Vienna this November, there's going to be talks around if there's going to be an extension of oil production cuts, and then if they're going to look at the level of compliance. We've seen high level of compliance, and then there are talks of a possible extension to beyond March now to the end of 2018. So, with that, we should see oil prices relatively stable.
Okay, now back here, the president is preparing to present his budget to the National Assembly. Do you think that this price we're seeing on the global oil market would perhaps have any effect on the budget that is to be presented today?
It shouldn't have any impact on the budget because it would be unrealistic to make adjustment based on current trading oil prices. As we know, oil market prices are very volatile, and then what matters is the average oil price. So the benchmark is based on average oil prices, and there should be a room for to take into consideration volatility of oil prices. Oil prices could go up or go down drastically. So I believe that it's wise and realistic to base oil prices to make room for average oil prices, and we shouldn't base it on trading current prices.
Now, this current price that we're seeing, how sustainable is that going to be in the short term?
In the short term, we would see oil prices rise above all the way to $70 per barrel due to a high level of compliance and market expectations for the oil ports, market expectations for all OPEC oil production cut to extend towards December. However, when there's high oil prices, there's incentive to create incentives for increase in American offshore production. And once this happens, there'll be an increase in supply in the market, which will crash down prices. So in the short run, we should see prices crash down to around highs of 50s.
Now, away from oil matters, the year is gradually coming to an end, and the general consensus for inflation forecast by analysts, including FDC, shows a marginal decline. Why do you think inflation will decline?
Yeah, we're currently in the harvest season, and then we've seen bountiful harvest season, and we've seen it take effect in the food prices. but we've seen that food prices have come down relatively. And we've also seen that there's been a slight exchange rate appreciation. We've seen the rate appreciate from $363 September to 360. So there's been an exchange rate appreciation, as well as the forex availability in the market. So all this would lead to a marginal decline in inflation. But let's not forget that in October, we will probably most likely see an increase in core index inflation due to oil prices reaching a high of as high as 205, diesel prices reaching a high of 205 naira per litre. But all in all, we should see a marginal decline in inflation.
If I may ask you, Pamela, what do you think will happen to the price of commodities such as rice, turkey, tomatoes, and beans in December?
Yes, okay, so during the festive season, we see that there's usually a high demand for these commodities. People are demanding for these stocks for parties and whatnot. But it's important to know that once there's high demand, there's definitely going to be an increase in prices. So yes, we'll see these prices increase, but it will not be as high as it was in December last year. Because in December last year we had Nigeria was in a very bad place. We were in a recession. Exchange rate was as high as 500 naira per dollar. But now we're in a stable place. We're out of the recession. We've seen our naira has appreciated. So we'll still see an increase in prices, definitely, but it will not be as bad as what we had in December. Turkey was as high as 4.8 in December, but we should see Turkey come down to about 2,800 naira. We would also see the price of rice come down. Rice was as high as 28,000 naira last December. We should see it around $15,000. So generally, we would see an increase in prices, but it will not be as bad as the last festive season. So it should be a good film effect for the season.
All right, thank you very much for your time, Pamela Bassi Duke, one of the research analysts with Financial Derivatives Company here in Lagos. Finally on the program, Dubai state-owned port operator DP World has extended its reach into Somaliland, announcing that it would develop an economic zone in the breakaway Somali region. The chairman of DP World, Sultan bin Sulayem, and Somaliland's Foreign Minister Saad Al-Sheikh signed the agreement in Dubai on Monday to develop the Berbera Free Zone. A 12.2 square kilometer area has been earmarked for the Greenfield Economic Zone, which will target sectors such as logistics and manufacturing. The project will be developed in phases, starting with an initial 4 square kilometer. Somaliland's small port currently exports camels to the Middle East and imports foodstuff and other items. It also provides some transport links for neighboring Ethiopia, a landlocked country that has friendly relations with the breakaway region. And that's it on the program. Thank you very much for watching. I'm Chimizi Obi Iwagu.